Good morning, traders. Welcome back to the Everyday Growth Advisors webinar series, the growth webinar. Today we are covering an important topic, which is how to use the VWAP indicator, also known as the volume weighted average price. So we'll be going through that in a second. I'm going to do a little bit of an update with the market here for you guys. I usually do this every Thursday so we can get a little bit of price action in for the whole week. And it seems like today is going to open up pretty green. So let's kind of have a look at everything that's going on over here to see how the markets are reacting to all the news that we have had for the past week. The NASDAQ, after breaking below this channel, came back in. I said that was a pretty bullish move up. Of course, lots of institutional buying happening. I saw lots of institutional flow. If you go back to my webinar on, I want to say Monday. Yeah, Monday we started talking about that. I've been seeing a lot of institutional buying coming back into these indexes. Now, of course, we are at a very critical level here with the NASDAQ, about to breach this 50 fib zone here, which if we do, and we are actually hovering above this crucial resistance here, which is the green line. If we can hold above this level today, we will see a nice little rally. So it's yet to be seen what's going to happen, but I'm feeling slightly, optimistic that we might see a small pullback and then a mini pullback, and then after a mini pullback, we may see a rally continued upward. So that's what we really want to be concentrating on this next few days, the next 2 days to be specific. And then on the S&P 500, we're kind of breaking out of this trend as well. So the same thing here. Now, interestingly enough, the Dow Jones is the one leading the pack here, having broken out and on its way back to the previous highs that it was trying to make, which is this 29,000 here. And if we are looking at the all-time high, obviously we haven't reached that level yet. It's going to be somewhere up here at the 29,000 level. So we want to, be watching Dow stocks pretty closely here, because they are the ones that are actually leading the pack compared to all of the rest of the indexes. So taking, obviously you do not want to be buying these right now, right? You don't want to be buying those. What you should be looking at right now is hedging your portfolio, right? This is the opportunistic moments when you take these moments to protect your profits, okay? You got to realize that when the market's at a agreed level, right, like this, where we are approaching a key level resistance, this is a opportunistic moment. People always ask me, when do you hedge? This is the moment you hedge, right? This is the moment you hedge, because this is the moment when there is a possibility of a reversal, and therefore taking a hedge here is worth the risk to reward ratio, right? You want your hedges to have a good risk to reward ratio. Okay, so the risk to reward ratio here, does it favor calls or puts? Well, it favors puts, right? Because you wouldn't want to take calls up here because they're super expensive, right? You don't want to be taking unnecessary calls. You want to actually be buying puts, right? So this is an opportunistic moment to buy hedges. Why? Because puts will be pretty cheap, especially between yesterday and today, since we had the rally, right? Puts would have gotten completely destroyed. So you want to be holding some kind of hedges, okay? Now, I haven't really thought about what I want to buy, but I will be going through this on our live trading session with the Everyday Growth Advisors mentees later. So, by the way, if you are a past mentee, you want to get in on the live trading session today, make sure that you DM me on Discord, asking me for the link later. We will be having another live trading session, which always goes on by 2 times bi-weekly, so once a week. This week we had 2 actually, one on Monday, but the Monday one was a very, very quick one. And so if you want in on the live trading session today, which happens at 10 a.m. Eastern time, please message me so that I can get you the link, okay? Of course, this is only open for past Everyday Growth Advisor mentees, which means you have had to take the mentorship course. As a gentle reminder, we have wave 10 of the Everyday Growth Advisors mentorship course, which will be signing up on Saturday. I put a reminder post out yesterday. If you are truly ready to become a profitable trader, please come join us on 10/10, enrolling at 12 p.m. Eastern time on optionsync.com. If you want to know how to enroll, you go to optionsync.com, tap on join now, right? Scroll down, and you will see the Everyday Growth Advisors beginner course over here. This will become live, and it will say enroll now at 12 p.m. Eastern time on Saturday. So that's how you can go join, and then you sign up and you get access to the Discord, which is where the course will be disseminated. All right, 5 days of growth, building a systematic trading system with me, your mentor for the 5 days. And the curriculum is jam-packed with things that you will need for your trading career. I know many people who have joined us, they can tell you whether it's worth it or not. All right. Cool. So now, apart from this key opportunistic moment here, remember, if we do break out, so what I'm going to be waiting for is to see if we actually do break out today. Before I take any hedges, my main key thing will be to wait till 10 a.m., see how Europe closes, see how the market's performing the first 30 minutes, and then make my decision if I want to be in hedges or not. Okay, so I'm not just going to close my eyes and take some hedges. I'm going to wait for some confirmation and then take some hedges, all right? Because you don't want to be buying unnecessarily hedges for no reason. Okay, if we do end up breaking out, then it's pointless. Okay, so that's the summary of the technical analysis. Now, another quick little update. Our ticker of the week, CRM, has been behaving really nicely. Remind me, guys, next time, whenever we choose a ticker, let's just freaking take calls on it. Because, to be honest, ever since we have started doing this live stream, every single ticker that we have covered on the live stream has somehow rallied. It's crazy. I don't even know what to say. Look at, since the start of this week, right? On 10/5, right? Look at where CRM was, right? We were here, okay? And look at where we ended the week. We are up almost $10. That's a 10 delta stack that we could have taken. In fact, on this dip here was opportunistic time. I wanted to buy in, but I was a little skeptical because of the way the market was going, and so I decided not to. But look at where we are now. Obviously, you do not want to be buying calls up here. Remember, we are in a channel. What do you expect here? I expect to see a downward momentum push. So if CRM comes down, likely a bunch of other things will come down. CRM has now recently been added in the Dow Jones. So remember, That's going to have a downward pressure on the Dow Jones. If the Dow Jones got downward pressure, SPY is going to have a downward pressure, Nasdaq's going to have a downward pressure. So you can do a rough analysis this way, all right? So I'm not saying that we will, but there is a chance, all right? There is a chance that we will see a small retracement either today or tomorrow, and that is a healthy retracement, okay? Once again, thank you so much for attending this webinar. I appreciate all of you guys taking your time to be here. Make sure you smash the like button, subscribe if you haven't. This is a pure educational stream where we cover, the market in real time. I give you my analysis, give you the lowdown, what you should be looking out for, what you should not be doing, should be doing. Today's webinar is concentrated on how to use the VWAP indicator, and I'm going to get to that in a second. So thank you for being patient with me. Now, apart from CRM, there was something else that I wanted to cover. Actually, no, I think we're good. Okay, so let's start the webinar then. You guys ready? Let me read some of these comments here. Yes, sir. I always wonder what VWAP talk was all about. Yep, we're going to get that started today. Good morning, good morning. Portfolio looking crazy green. Yep, mine too. Morning all. Morning, how about selling calls? Would this be a good time? I wouldn't sell calls here because I don't really, it depends on what you're selling calls on. Remember, selling call strategies work best when the implied volatility of the option is high. You don't want to be just selling calls for absolutely no reason, okay? You want to sell calls on things that have a high volatility across the board. That's the main focus there, okay? So selling calls, yeah, you remember there's a specific strategy for that. And if you're interested to learn more about that, take the intermediate course with us. We break down the strategy completely, okay? What happened to Fastly? It ripped up. I guess FOMO maybe will present a downside movement soon. I don't know. I haven't looked at Fastly, but I know that yesterday I had a crazy ass day. So we'll see later. I'll go into it in a second. All right, let's get to the webinar now. So we are about to embark on this journey, which is the VWAP. Right? What is the VWAP? Oops. Okay, so the VWAP indicator, oops, wrong color, let me get black. VWAP. Volume, weighted, average, and price. What is the VWAP indicator? And why should you use it? Okay, now I know many of you don't see me using the VWAP very often, but in all honesty, I do use it from time to time. It just depends on the time frame analysis that I'm using it. If I'm trading intraday, I do refer to it, but it's a good gauge on the cost effectiveness. Oops. So, what is it for? It helps you measure the cost effectiveness. Okay, it helps you measure the percentile of price structure or price action. Okay. And it also helps you keep track of the average volume by price. Okay? So cost effectiveness is something expensive or is something cheap? That's one thing a VWAP helps you to understand. Okay? Next, the percentile of that. How expensive and how cheap? All right, and next, how many people are trading this? So the volume base. These are the key things that the VWAP helps you understand in day trading. Okay, now there are lots of benefits and then there are some disadvantages as well. So I'm going to go through all of them from my perspective or my experience using them. The reason why you don't see me using them or don't see me using this indicator extremely commonly is because this indicator sometimes can be inaccurate. Okay, now it's just like all indicators. It's not like this one's more inaccurate like the rest. It is the same inaccuracy as all of them. It's just like the relative strength index indicator, right? The one down here. Do I use it all the time? No, but do I have it there? Yes. So what is the difference between, these relative strength index indicators and then VWAP and all of those things, right? Well, the VWAP, what it helps you do is, let's say, for example, you have 2 points on the chart, okay? And we're going to go into a 5-minute chart here because it works best on a smaller time frame. If you're day trading, you can go into a 10-minute chart and a 5-minute chart. I like using a 5-minute chart. It looks the best there. You could also do a 1-minute chart and it will give you a more accurate representation, but 5-minute is usually the best for me personally, okay? So remember, the best time frame that you want to use a VWAP on for day trading is a 5-minute or 10-minute, all right? As you go higher in time frame, you'll see what happens. It gets squashed. Now, it doesn't mean that you can't use it. It's just, it's more reliable and more, you can see more of it on the 5-minute chart, okay? So, for example, the first thing the VWAP helps you understand is, and by the way, I have 3 zones here, right? I have 3 lines, right? There's one up here, and this is the same setup on your Think or Swim platform. If you add your VWAP indicator, it's going to show you the 3 things. The 3 lines, 1, 2, 3. The black line over here is the middle band. This is going to be the top band, which is the 75th percentile. Okay, and this will be the bottom band, which is the 25th percentile. Okay, now, why do professional traders use this indicator? It's because they want to be able to track how institutions are buying up shares, okay? Remember that if you have a, I don't know, let's say a $1 billion market cap stock, right? And an institution comes in and buys, I don't know, maybe 300 million shares, right? $300 million worth of shares. This is going to cause a significant price increase, right? It's going to cause a significant price increase. Why? Because they just snapped up 30% of the floating shares, which are outstanding, right? They just snapped it up and they swept it. This will cause the price to spike, right? And that, what does that do? That makes the average price that is snapped up spike up, right? So what the VWAP helps you visualize is, on this upper band, middle band, and lower band, it shows you when the price has been snapped up at different prices. Okay, so the stock has been snapped up at different prices. So for example, some of the stock was snapped up here, some of the stock was snapped up here, and then some of the stock was sold off here, right? So you can see the volume incoming. And by the way, this is Apple. We're looking at Apple on a 5-minute chart, and this is yesterday's chart, okay? So you can see lots of volume came in, and possible institutional buying sent the price up, right? And then it used the medium price as a support. And then once it started to reach the upper bound, when it was at a 75th percentile of all volume weighted by the average price, then there was a sell-off, right? And then the whole system starts again. Now, obviously here there is a little bit of a break because this was a break in the trend here due to the market. I believe it was market open, market close, right? So the main important thing here is to know that this VWAP indicator helps you look at whether something is overpaid for or underpaid for. Okay, this middle line helps you tell you the median price at which people are paying for these shares, but in terms of the volume that they're buying it at. That is the helpful part of it. Okay, let's say somebody's buying shares at $50, right? And somebody's buying shares at I don't know, $300, right? Actually, sorry, that's a bit too steep of a change there. Let's say $100, right? Well, let's say over here there were, I don't know, 100 shares bought, right? But here there were 10,000 shares bought, right? Well, then what's going to happen is that the VWAP indicator is going to spike up, right? And the medium line will be in the middle, right? So you'll have the lower bound, you'll have the upper bound, right? So the main thing here is the VWAP indicator helps you take into account the volume also that is purchased, and those spikes that you see will help you tell you when something is being paid for the most and when something is paid for the least. So in my specific case, I have set it up to be the green one being the 25th percentile, the bottom of the VWAP, the black being the average, and then the red being the 75th percentile, which will be closer to the top of the range. Okay, so this is how it's helpful, and I'm gonna get to this in a second. Let me actually see what you guys are saying on the chat, because I want to make sure that I'm going in the right direction here. Good morning, guys. Make sure you guys smash the like button if you can. Take a second out of your day if you can, just to help me out here, please. If you can, it really will help me out if you can smash the like button. I really appreciate you. Morning to all. Again, we're trying to win. Would this be a good time to grab a few leaps? No, absolutely not. You don't want to be grabbing leaps today. If you're in here and haven't taken the class, do it. I promise you'll pay yourself within 5 days. Thank you for saying that, Rainiel. I appreciate that. Is this what the Bollinger Bands use? Not specifically, no. The Bollinger Bands are a different indicator. Okay, now back to this. So, generally speaking, you will realize that a stock will use the VWAP bottom as a support and the top as a resistance. And the middle is usually used as a intraday support, which is usually acts as a moving average. So, the key things about VWAP indicator that you need to know: when something's on the bottom VWAP, this shows that there will be soon a spike in demand. Why? Because something, this specific price point, which is on the VWAP, is starting to become cheap, which means that soon there will be institutional money flowing in, which is what happens here, right? And you can see the same thing happens when it touches the VWAP. Here it goes back up to the middle, right? So think of the middle line as a magnet, okay? And then this top and bottom line, a flux between fear and greed. This is the way that I like to look at it, okay? So the top is the greed, the bottom is the fear. Every time people get fearful, institutions come in, buy, and it goes back up, right? And then when people get greedy, institutions sell, and it goes back down. They get fearful, institutions buy, it goes back up. Greedy, sell, goes back to the middle, or goes back down, right? So the constant flux between these two shows you the average price momentum, where the stock would fluctuate between different price levels, okay? But most importantly, it shows you when something is getting close to being expensive and something when it's close to being cheap, okay? Because the average price being paid is the black line. The expensive price being paid is the red line, and the cheap price being paid is the green line. That's the easiest way to think about this, okay? The average price is the black line, right? And then you have all the different things that you can do with it. Now, it's a great indicator to use for intraday trading because it helps you look for these specific price actions when the volume comes in, okay? You need to use this concurrently with volume because you need a view, and it's even better when you put OBV in there. Okay, I haven't enabled OBV here, but if you put OBV in there, you'll see what I mean, right? You can see when you use it together with OBV, you can see exactly when the OBV is coinciding with above the VWAP, it tends to get sold off, right? Okay, OBV tends to get above the VWAP, right? It gets sold off. So you can use two indicators like that to make a more accurate based judgment. Now the problem with this is, and for me, this is not just for this indicator, okay? The problem for me and along with other indicators is the fact that the VWAP can be a self-fulfilling prophecy. What does this mean? This means that sometimes you would say that the volume and the price action is causing traders to sell the stock off. But you can also say that it's because people see that we are approaching the top of the VWAP that they sell the price down. Okay, so therefore it's a self-fulfilling prophecy, because whenever traders are looking at it, they tend to behave as they see the thing happening in real time. Okay, therefore the act of examining the VWAP itself causes the prophecy to fulfill. So it's kind of like how do I put this in the most easiest way? You see a price action reach a certain level, like a support and resistance, right? And you can see this way, right? Let me try to make it a little more obvious, or explain this a little better. So, for example, support and resistance, we know this indicator, right? It's the self-fulfilling prophecy idea is that, oh, we're approaching a resistance, right? We've seen this resistance before, therefore we should get prepared to sell here. This is what all traders are thinking. This is what the algorithms are thinking. This is what the institutions are thinking, right? They know this is the level, and therefore they sell off the stock, right? And then, oh, okay, this is a support down here. This is where we should be buying the stock. And so it becomes a self-fulfilling prophecy based on the indicator. That is one downfall. But it doesn't just apply to VWAP. It applies to a multitude of different indicators. This actually applies across the entire stock market. There are a lot of different indicators that have this issue. For example, Fibonacci retracements or extensions. And this doesn't mean that they don't work. All I'm saying is that there is a certain amount of self-fulfilling prophecy that is involved with these indicators. And that's one little downfall that you need to keep cognizant of when you're dealing with these things, okay? Because I don't want to be that person and tell you that this is not effective. It's actually a very effective indicator, because it takes into account the volume average movement for the entire day, okay? And notice what happens when you put the VWAP together with the support and resistance, right? You can see they coincide at mostly the same levels sometimes, right? Look down here, look up here. At other times it doesn't. Sometimes it falls short, sometimes it falls over, right? But by using this together with other indicators, you can get a better understanding. Now, what is this helpful for? This is helpful for traders who are very price action based, okay? Now, if you're a very technical trader that uses price action on a daily basis, the VWAP indicator is all you actually need, along with OBV, right? Because these two indicators will show you exactly where the volume and momentum is being pushed through the stock, through the day, okay? Which time frame suits it best? 5 minutes, I just mentioned that. Intraday VWAP or moving VWAP, which are we using? We're using an intraday VWAP, and we're using a 5 minute time frame. Can you show us how to get the correct VWAP indicator? I have it, but it only has one line, not three. Sure, which is the correct indicator. Okay, so this is the one. So go into the indicators and you're gonna type VWAP. You're not gonna use the built-in one. You're gonna use the one. The one that I'm using is called the one by the Yang Guizi. This one, not the update, just the regular one with the 3,452 likes. And you're gonna click on that one. Okay, the one that I just started. It's a standard deviation bands V2, and then you're gonna need to make some amendments to it. So these are the amendments that I made. Oops. So you're gonna go into the settings of it, and you're gonna uncheck all of the upper bands and the styles, lower bands, upper bands, all of this. You're gonna uncheck everything except for VWAP, upper and lower, and then you change the colors to whatever you want. You feel free to use any colors you want. Remember, this is fully customizable to your own approach. You're not supposed to be following me. You're supposed to be using what colors you like. For me specifically, I like to keep my colors the same, right? Red for overbought, green for oversold, right? Black for the average, and for the inputs, you don't change anything here. You can uncheck these two if you want. Doesn't really make a difference, but you just want these three on the top, and that gives you the 75th and 25th percentile. That should be pretty straightforward for you to do. Okay. I just mentioned what it's called in TradingView. I just literally said. So I hope you guys got that. Okay, so now if you are day trader and you really enjoy price action movement or trading with price action, then using the OBV indicator together with the VWAP gives you a really good advantage, because you get to see when the volume is increasing, right, in an uptrend, or when it's decreasing in a downtrend, right, and also you get to see when something's getting overbought, oversold, right, or this is the price that is acceptable, this is the price that is not acceptable, right. Those are the kinds of things that you want to see, and it's per session, right? You're looking at it per session. So another thing you can do is also put the session volume in there, right? The session volume. Where did they go? There we go. So now you get the session volume in there, right? And if you go into a 2-minute chart, you can see this more clearly, right? And the obviously, actually the 5 minutes probably the best here. Actually, 2 minutes. So here we go. So we do, when you look at the session volume here, and you look at the 2-minute chart, let's say intraday you're trading, this is the previous day, and now we're just looking at the whole of yesterday, right? Now you can see, okay, look, Apple was here. This was the line of control. This red line that you see here, this line P, this line up here, this let me try to change the color. I want to make it maybe purple. There you go. So this purple line here shows you, okay, this is the point of control, the line of control, point of control, something, whatever that you want to name it. It's actually called the point of control. I call it the line of control. It shows you where the most volume was traded for the share in terms of price, right? And now when you coincide this together with your moving average and also your OBV and then also the VWAP for the day, you can see clearly where these supply and demand zones end up forming, right? You can see clearly when the price action reaches the bottom VWAP, the stock tends to get bought up to the top VWAP, and then what happens? Consolidation, and then what happens shortly after? At the point of control, it comes back down to the bottom VWAP and kind of plays a game of table tennis back up here, and then comes back down again, and then it starts to make higher high, higher lows, and then we don't know what happens after this, right? But Apple starts to consolidate above. Usually, if something is consolidating above this, the middle average medium VWAP, what we're expecting is a price movement up, right? So remember, above the moving average, the medium, this is bullish. Okay, above the median, that's bullish. The moment we go below, that's bearish. Okay, if you are I'm saying if you're consolidating here, that's bearish, right? And then expect the price action to go down. Okay, so let's try and find an example of this in a previous scenario. Here, so look here, right? So you can see that the price action starts to go below the median price, and look what happens. There's like a consolidation here, and as it consolidates, you see it's set up for a down movement below, and then as it approaches and gets oversold below, remember you gotta wait for the wave to complete, right? You gotta put all of this together with what you've learned. It's not just one thing. Remember that. See, the major problem here is learning about the VWAP is not just enough, right? You need to put this together with all the things that I've taught you, right? For example, if you've been attending this webinar on a regular basis, you've basically created a trading course for yourself that's tailor-made from what I have been teaching you, right? And so remember, if you're seeing this sell-off here, you want to wait for the wave up, confirming, you know, that, oh, okay, we're not going down further. Then if you see the reversal, which for example here you have kind of a double bottom here, right? Okay, now we can start to enter this to a long trade, right? And you can see the same thing here. Consolidation below continues here as you see this, a wave up, failure to break above, and it sells off further, right? So this is how you can use the VWAP indicator to your advantage, okay? It's just a little neat little trick, okay? Just as, you know, kind of I want to get some feedback here. Is this webinar helpful for you guys so far to understanding the VWAP? Because I love to hear the feedback from you guys to know if I'm heading in the right direction with these webinars. It's really, really important for me to hear your feedback, and it's absolutely important if you like what I'm doing for you to help me to click the thumbs up, like the video, because that's how this video will reach other people. If you can, please do that. So please give me your feedback. It's really, really important. We should do a walkthrough for Ichimoku clouds. So I used to use Ichimoku clouds, but I only used to use it when I was Forex trading. And personally, I think it best works for Forex trading, but not stock trading. That's my view on Ichimoku. What is it called? Okay, so I got you guys the indicator already. How do I place my OBV on the candles in Thinkorswim? Right now is on the bottom of the chart. How do I place my OBV? Oh, I don't think you can move it to the top, or maybe you can. You're gonna have to see how you can. I'm pretty sure you can. I think you have to adjust the windows somehow. Yeah. Hopefully we can go and backtest using the solidified understanding. Yeah, the thing is, you gotta attend the live trading sessions. So NT Nguyen, you know, this stream's gonna be upgraded really soon. I'm gonna be doing live trading sessions which are gonna be private, but it's not gonna be part of the webinars or the pre-market live streams. We're gonna probably do like pre-market live streams and then go into live trading sessions, which you can be a part of. More details on that coming out in the future. But yeah, like for example, if you're an EGA mentee, you've taken a course before, I definitely, you know, spend time going through the indicators and all the other stuff through the live trading sessions. Anybody who has taken the live trading session with me will know how effective they are. So yeah. See here, this is helpful, although I feel the chart is almost unreadable. What with the blue yellow graphs? Those are the session volume. You have volume that goes this way, upward, vertically, showing you per price action this way, for volume this way. You also have price volume going sideways for the price points each individually. So you got to put multiple things together. The only reason why it's unreadable is because I have multiple indicators on. You can't just be using one indicator for your analysis. You have to put multitudes of them together. So, I mean, yeah, it's ugly, but if you want to day trade, you can't really expect to just use one indicator like that. It's not going to give you an accurate signal. You need to put this together with OBV and the session volume in order to get the accurate indication of where you're hitting. That's what I'm trying to explain to you. Love this webinar. Bollinger Bands should be next. Bollinger Bands are pretty straightforward, to be honest. Great info as always. Thank you very much. Appreciate that. Go into OBV and TOS and click the up. There you go. Yeah, I knew there was some easy way to do it. There you go. Sebly has you. Who was asking this question? I think it was JR Agenord. Yeah, this follow what this guy's saying. Go into OBV in TOS and click on the up in settings, and there you go. That should help you out there. Okay, well, short and sweet. I like to keep these webinars as simple as possible. We don't need to overkill, and to be honest, you know, we will be covering a lot of this in the live trading session. Remember, guys, if you are a mentee and a past mentee and you want to join the live trading session today, make sure that you message me on Discord for the link later on, 10 a.m. And I will be going through, you know, a couple of different examples today. So we'll see if we can use the VWAP in there as well, just to show you. Great example. So just used it on WKHS chart, and I now see everything that you're saying more clearly. Awesome. Do you think we see a pullback before the end of the week? Absolutely. I think so. Minor pullback is definitely needed. And that's important for us to keep running. So I will be looking for that. All right then. Well, I think that does it for the webinar today. Keep it short, keep it simple. Appreciate you guys turning up. Thank you for the likes. Appreciate that as well. Make sure that you guys tune in tomorrow. Come with your new tickers for next week. Your recommendations for next week's tickers. I hope to see you here on the live stream. And yeah, have a great day, guys. Remember not to overtrade. Remember not to be taking calls today. This is the wrong day to be trading calls until unless you're scalping or day trading. That's fine, but you're not supposed to be swinging calls in this environment. Okay, you're basically at a very key level here, so you don't want to be doing that. Yeah. Hey, if someone signs up for the EGA course, is there a minimum amount of cash that you recommend they have to invest in options plays going into the course? Asking for a friend. Yes, our recommendation is between 5K to 10K, but 10K is a more realistic amount to start with because of the risk management strategies that we teach you. You should not be trading options if you have less than 10K. That's how majority of you get into problems in the first place. I go through this in detail during the course. It's part of lesson 1. And the reason why majority of people lose money, because so many people out there have over sensationalized option trading, making you think that you can put $1,000 down and become a millionaire, or make 30 grand overnight, or make 10 grand overnight. That so many of you think that it's possible without hitting a complete lottery. And I go over this in the EGA mentorship course, where we really set out realistic expectations for you and your learning journey. So yeah, if you're planning to join the mentorship course, definitely reach out to me and we can talk more on Discord or on Instagram. I'll be happy to answer your questions offline, and I hope to see you guys on Monday for classes. In the meantime, make sure you guys keep your dreams alive. Keep positivity high. I know it's difficult in this market environment, and I hope that you guys will have a great trading day. See you tomorrow on Friday, Recap Friday. Love, peace to all of you, and I will see you tomorrow. Bye-bye.